What's going on, SoFi investors? For the first time, probably in the few years that I've been holding SoFi stock, I am concerned about what's happening at the company. But if you look into it a little bit deeper, it might not be as bad as we think at first glance. So I want to talk about the two executives leaving the company in the past few weeks and the convertible notes. Of course, the stock went down once the convertible notes were announced. And also, they were a little more expensive than initially reported for shareholders, diluting us even a little bit further. I am concerned, I'm not going to lie. But when you start to look into these things a little bit deeper, my concerns are alleviated a little bit. Let's get into it. When two executives within a few weeks leave your company's management team, it's a little bit concerning. And if you're not concerned about it, you should be. And that's why you need to dig a little bit deeper into who these people are, the opportunities that got presented to them, and where they are at in their life. Because sometimes when you have a lot of money, you get that financial freedom that you've been working for your whole life. It kind of gives you some flexibility to say, I don't want to come to work anymore. I want to go figure out what I want to do with my life. But we can't just stick our heads in the sand. There can be a lot of negatives that go along with executives leaving companies. Are they not jiving with the company's mission anymore? Are they not jiving with Anthony Noto? Is Anthony Noto too demanding for them? Is he kind of rubbing people the wrong way with his management style? Those are all things that could be possibilities. Also, if you look at a company like Tattoo Chef, once executives started bouncing from the company, that company fell apart and eventually went bankrupt. That's why you have to do your due diligence and see why these people could potentially be leaving the company and if it's an ultimate concern for the trajectory of the company moving forward. The first executive who left that I want to talk about first is Aaron Webster. He was the chief risk officer, and I found out through my research that he got demoted to an EVP position. So could that be the reason why he left? Or did he tell Anthony Noto that he was going to leave and he was going to wait until his stock options vested and then bounce to PayPal? You can look at this in two ways, in my opinion. First of all, he was the chief risk officer, so in the management hierarchy, that's not a top dog. Does he have an important job that gets paid well? Of course. You have to have a good guy in this position to be your risk officer. But he's not one of the top dogs making the big time decisions. And then you got to also understand that PayPal is completely revamping their management structure. So this is why I think it could be a positive. It's a negative that one of your executives is leaving the company, right? That kind of goes without saying. But on the positive, you look at a company like PayPal who's completely restructuring their management hierarchy. And this company generates a ton of free cash flow, $4.6 billion in free cash flow in 2023. So they're probably using some of this cash flow to kind of poach people from other companies, pay them more than probably what he was getting paid before with some incentives. This company is already a very established company that's been around for decades, so they have the ability to pay these people some more money, especially when you have all that free cash flow. But another thing I was thinking about is maybe the execs at PayPal are like, I like what SoFi is doing, so let's try to poach one of the lower guys on the totem pole in the management of SoFi, bring them over to PayPal, and maybe help integrate some of the strategies that SoFi was using into PayPal's kind of restructuring. They have a new CEO over there. So I'm looking at that. Maybe it's not as bad as I first thought. This guy's not super high up in the management at SoFi. And I really think with all that free cash flow PayPal has and the new CEO, he's probably poaching guys he likes from other good companies and trying to integrate some strategies that these companies are using that they like. Because I really don't think this guy leaving is that huge of a deal for SoFi. But the next executive, the president of SoFi Bank leaving, that's a much bigger concern. Let's get into that. The other executive to leave SoFi is the president of SoFi Bank, Chad Borton. This is a lot bigger of a concern at first glance. I mean, this guy is right there with Anthony Noto, one of his right-hand mans at SoFi, right? So when he leaves the company, you're like, oh God, what the hell is going on? This is super concerning. And then you do a little bit of research on him, and they actually brought Chad out of retirement to come be the president of SoFi Bank. And he pretty much over the last few years was in charge of making SoFi transition into the bank that they are today once they got that bank license, right? So maybe his job is done and he can hand the reins off to somebody else. His stock-based compensation just vested as well. Those stock options are ready for him to do whatever the hell he wants to do. That's one thing I'm definitely going to be looking at over the next few quarters. Is Chad and Aaron just dumping their shares as soon as they got vested? Who knows what will happen. But there's like Instagram posts, or I think it might have been a LinkedIn post, where Chad was saying he took 6 months off to spend time with his family. And, that's a big deal to leave a big position, take a hiatus for almost a half a year, and then go back into the workforce. But if that opportunity didn't present itself with SoFi, he probably would have stayed in retirement. So this is a guy who values his free time. He values his family time. Since his stock options vested, now he can leave SoFi and go back to hanging out with his family or doing whatever the hell he wants. It said in the press release to pursue other opportunities, but that's super vague. That opportunity could be him sitting on the couch hanging out with his kids and his dogs. Or he could go to another company. So that's something we have to keep our eye on. If he takes another president job at another bank or something like that, or another fintech company, then we're like, oh, maybe there was a reason why he left SoFi. Or is he just parlaying this into the next opportunity? A lot of these top-level executives in today's workforce, they're only at companies for like 2 to 5 years. Then they bounce, their options vest, and they take the next opportunity, and they keep that snowball rolling of all these different stock options in the market. They take half out, and then they kind of just go to the next position, get another big salary bump. I mean, that's kind of where we're at in this like fintech, super executive level roles. That's the way that these kind of guys function nowadays. They're not in these companies for 20, 30, 40 years anymore. It's kind of like, all right, you're going to pay me 25% more of my 6-figure salary. I'm going to go hang out with you guys and make more money, as opposed to being loyal and getting your 3 to 5% raise every year. So ultimately, from doing a little bit more research on these guys, I'm not 100% concerned. I'm still pretty concerned though. I'm at like 75%. So am I buying more shares? I'm kind of pumping the brakes on buying shares right now. I kind of want to see how some of this shit plays out. I think that's a responsible thing to do. I'm pretty overweight on SoFi shares already. One more thing before I let you guys go, I want to talk about these convertible notes. They originally thought it was going to cost around 61 million shares, and it ended up costing 72 million shares. So we got diluted as shareholders a little bit more, but we're hoping that the institutions that bought these convertible notes are going to hold on to these shares and not take a quick payday. We want these institutions to hold these shares to the $15, $20, $25 range over the next 4 to 5 years. That's what we're hoping happens. That's what happened with Uber. Uber did a very similar deal, and if you look at their stock over the last year and a half, it has went up huge. So what does this mean for SoFi stock? I think we're going to see a depressed price for a little while longer. I think we're going to trade in that 650 to 750 range for probably the next month or two, right up until earnings are about to come again. And then we're going to pump up a little bit because these convertible notes are going to help with the bottom line. So our EPS is going to be very good next quarter. So I think we might see another run up into earnings next quarter. So let me know in the comments below. What are you doing with SoFi? Are you buying more shares? Are you holding, or are you selling? Please let me know in the comments below. I would love to talk to you guys about what you're doing with SoFi shares. It's a very interesting time for SoFi. When you're invested in a company that just became profitable, there's all these moving parts, man. That's just a part of the game. And they're getting rid of some bad debt for some better debt. Hopefully that will benefit them in the long run. I have faith in Anthony Noto. He was just on Mad Money with Jim Cramer, and the dude, he's just so smart. He's a G. He's a guy I would go to bat for. I would go to war for. I would have that guy standing by my side and working with him any day of the week. I really believe in Noto, and that's why I'm holding my shares strong. Let me know in the comments below. Thanks again, guys. We're 3 subs away from getting to 500, so we can get that first stage of monetization behind us. Please do me a favor. Hit that like button. Subscribe to the channel so we can continue to grow. Thank you so much. We'll talk to you guys on the next one. Peace.